What's up, guys? Welcome back to RT2CC Comic Club. Justin here, and I'm kind of excited about today's video, even though it's an old recap. But I'm going to talk about an important lesson in terms of trading that I think a lot of you might like, especially if you're beginning and are new to trading. And then I'm going to go, talk about the recap and stuff like that. So before I start, I just want to talk about today's market, how it did. I'll post a screenshot of this week. Today was probably the most calm of the week, and I'm actually excited that it did that. The volatility is just crazy. You could see like on the screenshot here, it went down. Went down a lot. Friday went down even more. Christmas Eve then went up. A lot. Like had our best day ever in the market, even though I didn't make as much then as I did today, which is kind of weird. But had a really good day. On the day after Christmas. Then yesterday was just nuts, and then today was relatively calm compared to the rest of the days. So I was actually pretty excited about that. I did buy a couple more puts, I think in the QQQ, like right when the market opened, just because I was seeing the stocks were kind of coming down a bit, and I was thinking that we might have a little bit of a pullback on Monday, just because the market went up the last 2 days in a row, prior to today. But anyways, yeah. So I am filming this on December 28th. And yeah, so obviously you guys know that, but I want to talk about, okay, so let's go back to August, because I want to talk about a trade I made, and it kind of segues into the next thing I want to talk about. So it has to do with EA Sports. So in the prior video, when I talked about my trades, I showed that I sold EA Sports, and I actually had like a $58 profit, but I ended up, that position I only held for less than a month. I bought it July 31st and sold August 27th. And the reason I sold it, I forgot to mention this, was because at the time, I actually, believe it or not, I saw a Pewdiepie video, one of his Pew News videos that he makes. You might be thinking it's not like the most reputable place to get news, but in fact, he does talk about, events that do happen. He gives his own opinion. He kind of puts like a funny spin on it, but he is giving like factual information. So what he talked about was how EA Sports, they were delaying the Battlefield 5 game, but the trailer, a lot of people didn't like it. They didn't think it was like too accurate or something like that. But anyways, their response to that was kind of like along the lines of, if you don't want to buy the game, then don't buy it. And a lot of people did not like that. And yeah, I think it kind of showed, because then there was a headline that I'll post a screenshot of that said, Analyst predicts EA's Battlefield 5 will be a serious disappointment, and the pre-orders lag Call of Duty by more than 85%. But this piece of information I got actually from that PewDiePie video. So right after that is when I sold the call, and it ended up being a very good decision, because I'll post a screenshot of the EA stock price. The price from July 31st, when I bought the call, it was at $128.75 a share. And I had a 130 strike, so it wasn't like that risky, at the time. But as of now, December 28th, it's at $79.30, which is a 38.41% decline. And I got out of that call position with a profit. So had I held on to that, I would have probably lost most of that money. Like it was like $2,000 I probably would have lost. So it kind of goes to show you, and I was actually talking about, okay, so this is the lesson I want to talk to you guys about. I was watching a really old video someone had recently commented on, and someone commented on my video saying like, do you ever stop to think the only reason you're making money right now is because we're in a bull market? And my response to that was kind of like yes and no. Like yes, the bull market's obviously making everything go up, but at the same time, there are bad companies you could have invested in, and it does take paying attention to the news and like staying current and up to date with all the current events to kind of make good decisions to pick companies that are going to be, growing in a positive way and making money off of those stocks. And he was giving me crap about like, yeah, but you're not paying attention to like charts or technicals or something. You didn't know what shorting stocks were. At the time, I kind of knew what it was, but now I definitely have a better understanding of it. But at the time, yeah, I was a much different trader back then than I am now. And I'm going to make another video about that later on. But anyways, where I was going with this was, it kind of makes me think that like there's maybe more than two, but there's two ways I'm thinking about right now that you can be a successful trader. One of them, and a lot of people do this, is they study charts. They do technical analysis. They study patterns, Elliott waves, cup and handle patterns, double tops, double bottoms, head and shoulders. They study all these things, right? And they put a lot of time into that, and they get good at reading those charts, and they can become successful trading by doing that. What I used to do, like what I've pretty much done up until now, was ignoring charts altogether. And what I did was I would pay attention to the news and read headlines and take the information and then, process it and then make a decision on where I think the stock will go in the future because of that information. And I believe that you can be successful as a trader doing just that as well, and not being, technical and looking at charts all the time. An analogy that I would kind of relate to this is golf. So take, for example, you have Tiger Woods. If you guys are not into golf, it's okay, but Tiger Woods, let's say Adam Scott, Justin Rose, there's some golfers that have very technical golf swings, so I would relate that to the technical chart readers. They have very technical golf swings. They stick to the the textbook way of swinging a golf club, and having proper angles, proper stance, and all that, takeaway, follow through, everything. And they're very successful. They win a lot of tournaments. They make a lot of money. They're very successful at what they do. Then you have other golfers like John Daly, for example, Jim Furyk, Ricky Fowler, people who have more different looking swings. They're not as technical looking as the other guys, but they also are successful. They still make solid contact with the ball. They still win a lot of tournaments. They win a lot of money. They're very successful with their swings. And so that's kind of how I relate it to trading. You don't have to, stick with one strategy to be successful. You can be successful in certain ways, but you can also be successful trading in different ways. And I believe you can be successful with both, but the way you need to be successful, no matter which route you take, you got to put in a lot of time. You got to put in the time to get good at each one, whether it's paying attention to the news. Like, you need to put a lot of time and stay up to date every single day, so that you're not missing, key pieces of information that might make the stock go down in the future. Now, if you're studying charts, you need to put in time over there to make sure you're studying and learning as much as you can, so that you can spot the trends and find good entry and exit points. But I do believe, if you're not going to study charts and you're just doing current events, it's kind of more of a long-term thing. You're more of a long-term investor. You're kind of a buy and hold type of investor. Whereas if you're, you study charts, you're more of like a day-to-day or, just short-term trader. But you could be long-term too. But I think most of the people who study charts kind of do that, on more short-term trades that they like to do. So, to summarize, I think you can be successful no matter which way you go. If you want to study charts, that's fine. If you don't, you want to just, stick with the current events and pick companies based on what they're doing, I think you can be successful doing either one. But you do need to, pay attention and put a lot of time into that, so that you're not, just kind of half-assing it, and then you're not going to get as good of a performance as you want. I hope you guys, I hope that helped you guys, give you, especially for those beginner traders who are kind of overwhelmed on how to trade stocks. I just want you guys to know that you don't need to be like an expert chart reader right off the bat. You can, a lot of it just goes on information that you get, and then the decisions you make and the predictions you make. Like I said before, we're not always right. Even chart readers are not always right. Most of us are wrong half the time. But I do believe that you can be successful no matter which way you go. Okay, so let's just get off of that. Let's just go straight into how the stocks did. Now on the this is the 29th and 30th recap. On the 29th, stocks did pretty well. Amazon had a great day. So you'll see with our winners, which I'll go to right now, we had a great day on the 29th. We made $13,000, and our top performer was Amazon. This was that call that I think purchased the day before. I sold it, and I was waiting for Amazon to come back down at the time, but it wasn't, and I jumped back on. It turned out to be a good decision at the time, but we all know that it kind of fell down. I lost a lot of money, but at the time I was really stoked because we had a really good day with that. And then you could see some of our other winners, NVIDIA, Apple, and then check out Tilray. Our call went up 114% that day. So again, I made a video about the cannabis stocks, but yeah, I was killing it with those cannabis stocks at the time. And then our losers, we had Tesla, Roku. Not a lot of losers though. But let's go to the next day. So the next day was not as good. The Dow and NASDAQ both finished down, but Amazon did hit $2,000 for the first time, which is really, really cool. So it was a really exciting time for Amazon at this point in time. However, we did lose around $3,000, so I'm going to go to the winners right here. Our Apple calls did okay, Netflix and Amazon, but we had some more losers. It wasn't like the worst day. It wasn't like a huge loss for us, but those are our losers there. Yeah. So okay, let's go to a couple articles and then we'll just leave it at that, because I know I wasted a lot of time. Well, not wasted, but I know I spent a lot of time talking about the stuff in the beginning of the video. So I'm only going to talk about a couple articles. One of them was Amazon. Morgan Stanley ups their price target to $2,500. Again, right as of now, they are not even close to being right, but I think this is more of a long-term prediction, because in the article they mentioned that Amazon Web Services, the cloud business, subscriptions, and advertising will result in $45 billion in profit. $45 billion in profit. That's crazy. By 2020, up from $25 billion this year. So that's only like about a year and a half away at the time this article is written. Not even. So I'm kind of assuming that that's their prediction, basically $2,500 a share by 2020. So that's still definitely possible. Let's see. This says the Morgan Stanley analyst highlighted the fact that Amazon has been able to surpass the high end of its operating profit forecasts by an average of 60% over the past 3 quarters. That was amazing as well. So I'll link to the description so you can read the rest of this article, but I do believe that web services, advertising, those are going to be huge, huge profit drivers for them. So that's why I'm still bullish on Amazon. I mentioned that already before, but other analysts agree. Okay, last article. Better buy Visa versus Square, and it's kind of a clickbait title because the author ended up saying they're both good. So he said you can pretty much make money on both. Visa has a lot of room to grow still. Square has a lot of room to grow because they're disrupting a lot of different areas, and they're just growing really fast. Now at the end of the article, he did say if he had to pick one, he would go with Square. He likes their growth prospects a lot more, so he picks Square as the winner. But he says you can make money investing in both. And I do agree. I think Visa is a pretty solid stock to look at. If you haven't looked at it, I think it's a good one. I've been looking at it, but I haven't gotten into it yet. But it is a company I do want to look into getting into. All right, so that about wraps it up. So I hope you guys liked this video. If you did, hit that like button and subscribe if you haven't already. And share with your friends if they're just getting started. I think this is a good video to share with beginner investors. So if you have a friend who's just starting out, if you could do me a favor and share this video with them, I'd really appreciate it. I'll just end off by saying I'm going to be making a video most likely tomorrow, but really soon, that I'm really, really, really excited about, because it's going to be talking about the companies that I'm going to be investing in and pretty much holding for the next 10 years, or just investing in actively over the next 10 years based on what I think that we're going to be in the next 10 years. So I'll give you kind of a little hint. It's really not a good hint at all, but it's going to be a video that you can watch with your eyes closed. In fact, I'm going to ask you guys to close your eyes when you watch this video. And so I'm really excited about that. I think it's going to be a fun video. And so stay tuned for that. Hope you guys have a fantastic night, and we will see you guys